In 2022, at least one checking or savings account was held by 537 million people. Since banks are so important to us, it's important to know how they work so you can make better decisions with your money. Banks don't want you to know about some things like how hidden fees or keeping your savings in a low-interest account could make it harder for your money to work for you. Nearly a century ago, Henry Ford said that it was for the best that most Americans were unaware of how the financial system operated, because otherwise there would be a revolution the very next day. The quote related to Mr. Ford seems to still hold true today, even though it was spoken more than a century ago. This doesn't mean that the idea of a bank is bad. No, banks are a good thing for us and have become an important part of our lives. Everyone wants their money to be kept in a safe place. You probably shouldn't hide your money under your cabinet. Also, you shouldn't dig a hole in your yard to hide your money. The truth is that banks are making a lot of money. Most of the time at the expense of people who don't know what's going on. But because the structure of financial institutions are so complicated and strict, some strange things happen behind the scenes that the public doesn't know about. We're all in this together, so it doesn't matter which side of the coin you choose. There are many ways for banks to make money off of you, whether you take out a loan, spend your money, or save it. The sad thing is that you don't know you're being taken advantage of. The fact that banks have more than one way to make money could be one reason why bank stocks have become so popular among investors. In this video, I'm about to share 7 truths about money that banks don't want you to know. If you're new to the channel, hit the subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Truth number 1. Every year, you lose money. You've probably heard that the bank is the best place to keep your money, but no one has told you that you lose money every year if you do it. This isn't because of the fees you pay or because someone stole your money. It's because of inflation. Inflation is when the prices of goods and services go up over time. This means that an item you could buy at $20 today would cost a little more in about a year and a lot more in the following years. If you think your money is safe, you expect its value to stay the same or even grow because of interest. Every investor wants to keep up with inflation, but this isn't always the case with most bank accounts. The average rate of inflation in the US is 2%. If your money in the bank yields 0.05, it means that the value of your money goes down by up to $1.95 every year. I'm not talking about the money you invested on other financial platforms with the hopes of getting a return. Instead, I'm talking about the money you have sitting in a savings or checkings account doing nothing. Truth number 2. Banks get money every time you use your card. First, when you swipe your credit card or debit card to make a purchase, banks make money through a processing fee. You may not know this because you were only charged for the actual price, but the merchant pays the fees. The merchant could have added these fees to the price of the item because he wouldn't want to lose money. For example, let's say you bought an item for $600 and paid with a credit card. If the merchant has to pay 3% on every purchase made with a credit card, that means a hefty $18 goes to the bank. The bank gets the money just for having the machines and making it easy to pay. Do you think the merchant will be happy to have $18 taken out of their profit? No, you're actually the one paying this fee, and this is how. Say that the item was meant to sell for $580. The price must have gone up to $600 because the business owner said so. The extra $200 will cover the 3% that will be taken to the bank when a card is used. Taking into account that most people would rather use their cards, that makes sense. Next, your card brings in a lot of money for the bank. That's why banks give you so many perks just to get you to sign up for a credit card. You probably don't know that your card's interest rates can go up at any time. A credit card's average interest rate is 17%. Your bank could decide to raise it to 18 or 19% though. Usually they can do this if they give you a 15 to 20 day notice. You don't get to read these long letters full of legal terms anyway, right? You don't pay attention to them, so the banks can do this and get away with it. Now, if you have a credit card interest that is compounded, it will just keep adding up. This will end up hurting you in the long run. If you don't pay off these debts, your financial situation could get worse. I'm not saying that credit cards are bad in and of themselves. No, a credit card is not a waste of time. It's a useful service that makes life easier. It's something that could be used every day. But you should be careful not to build up debts. Trust me, it will be dangerous to be there. Make it a habit to pay off your debts every single month. Truth number 3. There is no actual money in your bank account. You could have a sizable amount of money in the bank, but these are only numbers and computerized records since banks utilize their funds for their operations and offer them to you in the forms of business loans, vehicle loans, or mortgages. Your money is in the bank, but in reality, it is earning extra money for the bank in other places. This reality came into play in 2008, when people panicked during the Great Depression. They went to the banks demanding to withdraw their money, but the banks did not have enough money to pay everyone. The banks may have that amount in liquidity, but in the event of a crisis when everyone makes a run for their money, the physical cash will not be there. This is due to a practice known as a fractional reserve banking, which permits your bank to lend money to people in need in the form of loans and mortgages. Does this mean that banks are not safe to keep your money? No, absolutely not. Your money is protected by insurance and the government is ready to step in if something goes wrong. As long as you remember this, you can sleep soundly at night knowing that you have money in the bank. As an individual, you may have access to your money anytime you want, but if everyone wants their money at the same time, no one gets it. Having money in the bank is not like putting money in a box where you can access it at any time. Your money is busy creating money. This time not for you, but for your bank. Truth number 4. Bank tellers are not your friends. I'm sure you thought they were your friends because they knew your name, called you often, chatted you up, told you they loved and adored you, even remembered your birthdays and anniversaries, and so on. The truth is that these people don't love you. They're just following a script and waiting for the right time to strike. My friend who is a banker told me how he could make friends with his customers. He does everything I told you he would do and wins their trust. He makes them feel like he's on their side, not the bank's. Then he talks them into getting a loan they hadn't planned on. Can you imagine taking out a line of credit for $50,000 you didn't intend to? That's what happens when you're friends with bankers, who only care about numbers. They are given goals by their managers and supervisors. If they don't meet these goals in record time, they lose their job. My friend also told me that some of his coworkers lost their jobs because they tried to be honest and cared about their clients. So be careful when your banker friend comes to you next year with a big smile and a story about his company. Don't let fake friends use your emotions to get what they want from you. How do you see these truths so far? What struck you the most? We'd love to hear all about it in the comment section below as we all try to help each other out. We'd love to hear what you think about all of this. Also, please do hit that small like button if so far you see this video as interesting. And going back. Truth number 5. Foreign exchange fees. Most banks also charge fees for transactions that take place outside of the country. This is not something your bank will tell you, but if you travel outside of the US and use your credit or debit card to buy things, you will have to pay extra fees. A friend of mine who went on a trip and spent 15 days outside of the US, when he got home and looked at his bank statement, he was shocked. He found charges for foreign transaction fees that added up to $105.05. Most banks will not tell you this at all, because you could get rid of them if you find other ways to have money. Some credit card programs work in places other than the United States. In this case, there will be no extra fees on your purchases if you use their services in countries where they have coverage. My friend didn't know this at all and wasn't in any program like this, so he got taken advantage of. Truth number 6. Make it a habit to always check your account. Your bank account is an important part of your life, so don't be too busy or too lazy to check it often. There could be hidden charges on your record that you don't know about. If you see a charge that isn't yours, report it right away. By law, Your bank has 48 hours to return the money to your account if you report it within a 90-day window. Your bank doesn't want you to notice, so they may try to delay the process or get out of it. Truth number 7. Your bank is watching you. Banks keep track of everything you do with your money. The law says that banks have to tell the IRS or Internal Revenue Service about any strange money transactions. This rule was made to stop shady deals like money laundering. If a depositor withdraws more than $10,000, it is reported to the IRS. If the IRS needs to look into your account, they will send you questions asking why you did certain things. First, the government wants to know if you have paid taxes on the money. Second, they want to know if the transactions were done legally. So whatever you do with your money, know that you're being watched. This could help you stay clean and out of trouble. And there you have it, the 7 truths about money that banks don't want you to know. If you enjoyed this video, then you will probably learn a lot more from watching this other video. 4 fundamentals of money management which will make a huge impact on your financial lifestyle. If you click on the screen right now, you can go and watch that. Do you want to learn more on how to thrive wisely? What videos would you want to watch next? Feel free to comment down below. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.